So I'd like to welcome everyone to our panel discussion on successful entrepreneurs and how to gain the investor backing. We have 5 very successful people on the panel today in which they're going to discuss their ventures, the challenges that they have overcome, and advice that they would give to their fellow entrepreneurs. Over the course of the hour discussion, we're going to interweave into the discussion some of the challenges specifically faced by women entrepreneurs that has kept an unlevel playing field as a challenge for them to get funded. We're going to hold any questions until the end, so we're going to go through the full hour, and then people should note some of the big questions they'll have, and then we'll open it up. So what I'm hoping for is that every person who's attending or sees this recording has a very clear takeaway from having joined and learned from these entrepreneurs. So for a start, let's just have each of the panel members just give a little bit of information about who they are. So Dave, please just introduce yourself.
Sure, happy to be here. I'm David Stengel. I'm the founder and CEO of a boutique Board Plus Plus that helps startups diversify their boards.
Jean Ann.
Hi, I'm Jean Ann Booth. I'm a serial entrepreneur, background in electrical engineering, sold 2 semiconductor companies, and then started my current one, Untitled, where we're having an Apple Watch for seniors.
Okay, and Joy.
Hi, I'm Joy Marcus. I am actually the founder of Brilliant Friends, which is currently an investor group of women investing in women. And we're actually about to close our first fund. I'm also a venture fellow at Jerusalem Venture Partners, and I've had a long career in digital media, exiting 3 times from digital media related startups and also large company experience.
Kim.
Good morning. My name is Kim Lalonde. I'm the founder and CEO of Key.co. Key.co is a technology platform that partners with 4- and 5-star vacation rentals to provide their guests with one convenient place to book all the in-home services and local experiences. So services such as pre-arrival groceries, chefs, babysitters, housekeeping, drivers, masseuses, and then as well as what are the top 3 things we recommend they experience while they're visiting these destinations. To date, we work with over 3,000 vacation rentals across 30 markets and growing.
And Howard?
Good morning, all. Howard Luber. I brought Keiretsu Forum to the East Coast about 11 years ago and celebrated my 35th year in private equity this past March. So this is kind of the space that I've been in most of my adult life.
Great. So we're going to start off with what I'm calling the beginnings, and we're going to take it from the approach of 3 entrepreneurs who are on the panel, and I'm going to take them back to their original mindset about why they became an entrepreneur specific to the venture they have. And then I'm going to ask for some input from Howard and Joy on how they engage with entrepreneurs who are starting off with their ventures. So Jean Ann, tell us, when you wanted to start another company, Untitled, where did the idea come from? How did you vet it? How did you pull together in the preparatory period to make the full commitment to lead this venture?
So thanks. I actually had no intention of starting another company. I was happily retired after selling my previous semiconductor companies to Texas Instruments and Apple. And then my mom turned 80. And my mom was a model. You can imagine, poor lady. She's a model. She has an engineer for a daughter. But there we were. My mom was super stylish. She was absolutely cognitively capable till the day she passed. And she looked at me when we talked about something to keep her independent and safe. And she said, I'm not doing it. I am not going to wear it. And so that was the first part of the genesis of Untitled. I had discussions with a number of other people who'd been with me in some of my other startups. And when we came up with what is a patented battery system in the band that means you never have to take your watch off to charge, that's the point at which I said, okay, this is worth coming out of retirement to do, because not only can we keep my mom independent but safe, we can do the same for millions of other loved ones too.
So because you're a serial entrepreneur and you had the benefits of successful exits, what did you do in this way that you started Unali, where knowing you had resources at hand, but you still thought you were going to go for funding? So explain a little bit about that very initial startup that went from just you to next steps or next people.
Yeah, so this was a really interesting deal because, you know, semiconductor companies are very capital intensive. And so I had, you know, significant relationships with a number of venture capitalists. And I'm one of, as far as I know, 2 people in the world who've had 2 positive exits from a semiconductor company. So when we laid out the plan, and it was about $3 million to get to first pilot, it was like, you know, that ought to be a couple of months for me. And I went off, I started pitching, and 9 months later, I had $500,000.
So the third was not immediately the charm, is what you're saying. So
No.
we're gonna pick up on that in the funding aspect. So Kim, share a little bit about how you came up with your idea and when it started in your mind. Take us through those very first couple of months, like Jean Ann did, and how you got out of the gate to get some traction for this idea.
Sure. So prior to launching Key, I ran business development for a large multi-billion-dollar firm and traveled every other week from Austin, Texas to San Francisco. And I had the luxury of staying in great hotels where I had all the convenience of the hotel-like services at my fingertips. So daily housekeeping, concierge for local recommendations, in-room dining. The firm asked me to spend 2 months of my summer in San Francisco and offered to get a vacation rental home for me so I could bring along my 2 young children. And what I found, this was back in 2013, and what I found was I was completely on my own as far as where to go, what to do. Beautiful house right in the heart of the city. No shortage of information online or friends to call, but it was on me to do the research, read the reviews, coordinate, and book everything. And at the same time, you had HomeAway, Airbnb, HomeAway, which is now VRBO, Airbnb starting recently in that last 5 years, and this just massive market size growing exponentially. And so I wrapped up my summer, returned back to Austin, and went and met with a property manager who's still a partner of ours today, just saying, if you offered Key to your clients and we took all this off your plate, is that something you would do? So we launched it South by, got data, spent a good 6 months on figuring out the demand, and then put our deck together and went out to raise money at the time. And that was five years ago. But it took a good 6 months to a year before we actually went out for capital, because needed the data, needed to flesh out the model that we had in our heads and get some real experience behind it.
So did you write a business plan?
On a napkin, really notebook, just jotting down ideas, testing, and really it was listening to the consumer, which for us is the property manager and the guest. So what are they wanting? What are they ordering? Is it repeatable? Because if everyone wants to customize every single little thing, that's going to be a headache. Who's our customer? We were everything to everybody as far as of price per night for the home. We're now focused on the lux. Given the data, we'll go build this, get it cash flow positive, and then take it more downstream as we automate more and more of it, which is where we are today. So
what I'm hearing is that you were really relying on your pitch deck. You were, once you went through this preparatory period, you prepared a pitch deck, and then the pitch deck evolved as you engaged with potential investors. Is that how you would describe it?
Yeah, so we had exactly. So the pitch deck, and then here's the idea. Here's what we have validated to date. And here's kind of our next steps and timeline. And we need this amount of money to go do this. But getting out on the road and talking to investors, that's a great way to just figure out, okay, where are the holes? What do I need? What am I not thinking about? It was my first time starting a venture-backed company. And so I had no idea. And so it's great getting on the road, even to this day in our rounds, getting on the road and talking to investors at the different stages. We'll go out for our growth round mid next year, and they look for different things at different stages.
So I want to explore this a little bit further with the investors on the panel. But before you do, so Dave, tell us a little bit about how Board Plus Plus came about and how did it move from an idea into some very concrete steps that people would buy into your vision.
Sure. So Board Plus Plus is really a departure for me. I've spent my career in venture-backed enterprise software startups, and Board Plus Plus came out of my experience of in 30 plus years in venture, never having a woman on my board, really seeing a lot of interesting and wonderful things happen in the startup ecosystem, but it being pretty clubby. And I did, when I thought about this problem, I was at the point in my life where I wanted to give back, and I'd looked at a number of sort of impact initiatives. And this just really resonated with me, partly because of my family history, partly because of my own experience. And then I did what I encourage founders to do. So I went out and did a bunch of informational interviews. I talked to people who'd achieved board seats. I talked to investors that placed people on boards. I talked to founders that were trying to form boards, and got a sense of where the market pain was. And it's still a boutique business. It's not something that I think will require venture funding, but we'll talk about the numbers a little later. There's a lot of room for improvement in my view, in the composition of venture boards, and a lot of ways to make the space more inclusive. And that's where Board Plus Plus fits in on the startup side. It's a double-sided market. And on the corporate side, it's really a path for big institutions to do leadership development. And most organizations struggle to retain talent at the executive level from underrepresented groups. And many people that are 20 years in at a big company sort of look up and don't see anyone that looks like them, and are do I really have a future here? And taking a board seat is a way for them to prepare for the next level up in a big company. So
Right.
That's how I got here.
I'm sorry, Dave. We're going to pick up later in the discussion some of the whole aspects that the lack of diversity on boards and some of the unlevel playing field that women experience, but as part of what you're doing for Board Plus Plus. So Howard, starting from the framework that entrepreneurs have now come up with an idea, they are thinking that they have something that is fundable, but they don't really know. Share a little bit about the engagement that Kiratsu Forum has with entrepreneurs when they're just in the very early stages, something sort of like what Kim went through at home over the kitchen and still had not gone out. What are you seeing with these entrepreneurs who are coming to your angel group? Are they unprepared? Or if they are unprepared, are they able to resource something from your angel group that gets them on the right path?
Well, it's probably really important to point out first that Kiratsu's focus is really in the strong later stage early investment. We are not seed stage investors per se. We see hundreds of early seed stage opportunities that we typically pass on every year. The companies like Kim's and Jean Ann's that have come and successfully raised money from Kiratsu are typically doing their first formal round, their A round per se, or a late seed round, depending on, it's kind of funny. We're on the East Coast, and when I first started this 11 years ago, we would get people that would come and we'd start talking about doing $2 million, $5 million, $8 million A rounds. And then shortly thereafter, we started getting applications for quote unquote seed rounds for $3 million from companies where the ink wasn't dry on the napkin yet. And we would point out to people that we're on the East Coast. This is not Silicon Valley. A $3 million round is typically not seed. So from a numbers perspective, I think the most important takeaway, though, is that we receive between 300 and 400 unsolicited applications from entrepreneurs every year who are interested in exploring funding with us. We're able to screen about the top 120 to 130 of those companies, from which we invite a maximum of 44 companies to present to our members here on the East Coast every year. And we fund typically 80% of those. So I'm not the perfect person to tell the individual who's thinking about starting a business, although I do a lot of that with the university connections that we have. But the Keiretsu model is a little bit later than that. And the good news is that we fund almost everything that gets through the process.
Okay, so Joy, I know you're on the venture capital side also, as Howard explained, a little bit later in the process, and we'll get a little bit more into that. But I'd like to get you engaged in this conversation. Is the entrepreneurs, and some of them are coming out of universities, they're coming out of other businesses in which they really do have really excellent ideas, but they need to get into a pathway that is helping them learn what they don't know. So, so I'll start with you for some advice here, but I'd like to then open it up to each one of you, is to give some advice to someone who's going to see this recording, who's watching it, that it's not magic stardust that a company hits a certain plateau. It's a lot of hard work and a lot of networking. So if you could just share some advice, Joy, on what those early steps are between entrepreneur and investor.
Yeah, so I actually teach entrepreneurship at Princeton. I forgot to say that in my intro. I apologize. I'm just off a plane from Tel Aviv. It's a little exhausted this morning. So I do, to the extent that I deal with students very early stage, I can certainly comment on this. So, look, some points I always give people. The first one is it going to be big enough? Like, you have, a couple of tries at this, right? In your lifetime, maybe it's 10, maybe it's 2, I don't know. You might as well go after something that's going to have impact, whatever kind of impact, however you define impact. So, impact, I look at a lot of social entrepreneurship companies, not as an investor so much, just to give advice, but also, obviously companies that build new products and make profit and make everybody lots of money. I look at things like that, ideas like that all the time. But my first pass is always, is the market big enough? Is this going to have enough impact? Whatever, again, however you define impact. And then, I ask the entrepreneur to think about, is there something about them that makes them uniquely or particularly well aligned with doing this thing? If I have a computer scientist at Princeton, I'm pretty confident that anything that relates to writing complex software, they're going to be pretty damn well positioned to do, even as compared to like virtually almost anyone else in the world, right? So I'm really confident when they're saying, well, I'm going to write this novel piece of software. I may be less confident when a computer scientist says they want to build something and they don't have any kind of mechanical engineering background or an interest in mechanical engineering, like building a physical object. So it's, market big, you're the right person. And then really it's like, go do it. Build a first iteration, design a first iteration, whether that first iteration is a video of what this thing will do, or whether it's the actual thing that people can try get as much feedback from the potential market as you can very early on. So everyone on this panel is probably thinking she teaches lean startup, and yes, I do. So I use Eric Ries's book in my class. I think it's really good. I think it's a really good way to approach starting a company. There are other approaches. I acknowledge this is the one I favor. I favor it at Princeton. That's what I advise. My advice is just do it. And I followed. I've eaten my own dog food. I kind of exited a couple of companies, and I'm starting a fund and with one of my actually very, very close friends who I was an undergrad at Princeton with. And we said, well, no one's going to invest in us unless we show them we can get good returns together. So we took some of our own money and money of other women. Our thesis is investing in women. I can talk about why that's a good thesis later. And we saw 200 companies. We invested in 6. One is already exiting after 12 months. So, and on the back of that, we're raising the fund. So we just did it. So I'm a big advocate. Do it.
Right. So Jean Ann, with the story that we shared the other day, speak about rejection in the first 6 months of an entrepreneur, especially the first time entrepreneur, what you experienced and shared with me, what they should be prepared to live through.
Well, I mean, certainly, and especially in the early stages, that initial pitching is going to be the test of your resilience or grit or stubbornness, whatever word it is that you want to use. Because, like in doing Unaliware, I'm different than a lot of other people because I have that cred. I have started and exited companies that made lots of money for everybody. And yet, I would go pitch Unaliware to venture capitalists that I knew, and what I would get back was, no, this is not for us. But let me know when you've got it ready because I want a Kanega watch for my mom or my dad or my uncle or somebody like that. Right. And so it made for a really difficult time because if you've actually ever done the funding process as an entrepreneur, and if you have passion about what it is you're doing, you're going to go through at least once that phase where everybody's telling you no, but they're also giving you those indicators that say you're still on the right path and you need to find a way to make it happen. I want one for my mom. And it becomes really hard to make sure that you don't fall into the I'm really angry because you're all stupid thing, right? And it's the, so you think it's a great idea, you want it for your mom, and you're not going to give me any money. And you think I'm going to somehow bootstrap millions of dollars because it is a physical product in the base, even though our financial model is all recurring revenue. And that's a tough deal.
So Kim, share a little bit about the arc that you went through in your initial interactions with the angel investors. And I think you had explained that you had gained some mentors along the way that facilitated this really difficult period. So if you could share a little bit about that.
Sure. So I'm of the belief that know what you're good at and then arm yourself with a team and mentors and people around you in areas that you're not. So for instance, we have a tech platform. I'm not an engineer. I'm sales background, go-to-market strategy. So getting a really strong engineer, but on the advisor side early on, I picked someone from the travel industry. We just armed ourselves. And if you look at our board today, it's founderofhotels.com. You've got an tenure exec from Amazon. If you look at our vendor model, fundraising, we added Rob, which Howard knows, Rob Neville, and we had raised venture out of the gate. So seed rounds and then venture. And then our business took a real hit during COVID. So we went back to the angel groups to do a bridge round. Karitsu's been phenomenal. We raised over 700K, Golden Seeds over 400K for this round. So we went backwards and then we'll go back out for growth round. But I think it's just finding that fit. So what stage is the company? How much are you needing to get to the next level? And then what is the match of investor? Because you can waste a lot of time For instance, we're not a SaaS model. A lot of venture capital firms are SaaS models. So it's not that your idea is not valid or good. It's just not a fit. All the funds have thesis. A lot of the angels as well. They come from a background in like investing in certain backgrounds. It's doing that research. But we used to joke at every round, like, okay, we need 40 no's. So I've got 20, now I need to go get 20 more and then we'll get a term sheet at some point. But it's really leaning in and getting the feedback is what I always try to do. No, okay, give me the 3 things on why, or what you see, or what am I not looking at, or opportunity wise. And there's not everyone has something to give, but there's some good nuggets in there where it's like, oh, okay, I'm not telling that story the proper way, so go change the slide. So anyways, it's I think that no is part of the process and it just makes you stronger, but you need the feedback and iterate on the story or the model, especially early on.
So was there anyone in particular or any organization or group in which you gained a little bit more insight to this path so that you didn't have to learn every single step yourself? Because mentoring is a buzzword that people hear about all the time, but where do you get a mentor? How do you get a mentor?
You just put yourself out there and network. So I'm looking, and people, it's funny on entrepreneurship, especially if you get into the ecosystem, they love to help investors, potential investors, other executives. Austin, where we're headquartered, is full of entrepreneurs and venture firms. And so you just ask for that 15 minutes and you work the network and get connected. So people you'd be surprised. And I'll never forget, one of our board members, he was the CFO, Tom Meredith. He was early investor. I remember meeting him in a Starbucks. And then we raised our A round. He came in and it was a convertible note. Then we raised our A round out of from Wildcat out of the Bay Area, and they were pushing, you need to put a board together, have a price round. I remember going to lunch with Tom and I was like, I know you sit on the board of Motorola, and he was the CFO of Dell, who came in early on and took that company to multi-billion-dollar company, public, et cetera. And I remember sitting at lunch going, I know you're on the board of Motorola and we're doing $5,000 a month, but I'd love for you to join Key's board. And you just put yourself out there. And I didn't get a yes out of lunch. He was like, I appreciate that. Let me think about it. We had a great lunch, just lots of feedback. And I think too, at that stage, they're looking for coachable entrepreneurs as well. Are they going to listen and take half of what I say? Otherwise it's a waste of their time. So they like, helping us grow up in the space. And then I got a call 3 days later and he said, I'm in, and he's still on our board, just renewed again. So he's still on our board to this day. So, anyways, you just got to put yourself out there, make the ask, and eventually you look back and it's a pretty impressive group around you working every day and on your board and investing and et cetera. So it takes a village to build these, and they're not easy.
So Dave, share some of these again, the startup period that we're talking through here on some of the points, because I can see you shaking your head. So share what is going on in that shaking head.
I just love what Kim was saying and agree on sort of every point. I think I'd add to that, as a founder, you need to love your problem more than love your solution, because maybe your solution's not perfect, but if the pain is real, and as Joy was saying, if the market size of that pain is meaningful and people really are suffering in some way, and you can make that better, that's powerful. And then you have to balance having conviction about your idea and taking criticism. Monica Wheat, who's an MD at Backstage, talks about getting feedback on your plan is the seasoning that makes it tasty. And I like that metaphor a lot, that you have to put it out there and take criticism, and you'll get all kinds of conflicting suggestions, some of which you'll think are idiotic and some of which might be idiotic. But when you hear multiple people that have been there before give the same point, take it to heart and think about how you get better. When you're at the beginning of any startup, you're selling a dream. and you want to get feedback on your testing in the lean startup, you're testing hypotheses, you're eliminating risks, you're addressing unknowns. And then at a certain point, you feel you have it right and you're going to traction. And then it's a different kind of conversation and a different set of investors that are interested in you. So that's it. And really get that support network of people that can give you feedback, because you can fail by not listening to other people. You can go too far. You can gut your 401k and, divorce and ruin your life if you go too far. And I've seen that happen too. So you really have to have some people that give you perspective on what you're doing as you pursue the dream that you have high conviction about.
So Howard, I hear coachable a lot. So what does coachable mean to you and to angel investors? Who is coachable? What defines someone who's coachable?
Well, those of us in the private equity space are probably famous for making one very profound, if you will, statement about people we invest in. We invest in jockeys, not horses. We're looking for people who can do it, who've done it before, but if they haven't done it, they understand what it's going to take to get there. And we approach every deal we do as an extended long-term partnership. We're writing checks, not in companies to create any kind of an adversarial relationship, investors versus management in the company. It's about coming together to create a successful entity that's going to generate a great return for all of us. Coachable is the number one piece of the puzzle, people. We invest in people, plan, technology, and marketplace in that order. And if the people piece is not there, we run away. Absolutely have to have the opportunity to work with people who understand that they have probably forgotten more about, quote unquote, the secret sauce that stands behind what they want to build a business around, with the understanding that folks like us have probably forgotten more about how to help them raise the money and find the rest of the resources that they need to create a successful entity.
So I have heard, but you guys would know more closely, it's a lot of the startups that are funded within the first year, what they pitch to you is quite different a year later, once they have had the resources to go to market and to have even a closer experience with what they thought was their targeted customer. So I'll start with Joy. So just looking at it from the point of view that you have seen money go into these entrepreneurs, into the startup phase, how much adaptability is built into your understanding of what your expectation is, and getting that entrepreneur in a startup through the first year, and that learning curve that they actually didn't have it all thought out as they had hoped?
Yeah, so in my sort of private life outside Princeton, I invest kind of post product market fit. So this has already happened. Like there is the product is basically built and there's a customer, at least one, right? And so there's some use of the product. But the companies I advise at Princeton are much, much earlier for the most part. And with those, what I expect is that, again, I have a little bit of maybe a different order than Howard. It's very interesting to hear your perspective. My order personally, and how my thesis of investing includes, person first. I think we all agree on that. If this isn't, you're investing in a set of brains and a mindset and just a willingness to, have the grit to make something happen, to create value. So that's like a given. If it's the person's not right, no matter how great everything else looks, I probably am not that interested. But when you get beyond that, my next thing is not actually the product. My next thing is the market. And my assumption is that over time, the product will evolve. And to, the first product being built, and this is very much again in this lean startup mode, is not the last product that's going to be successful. It's going to iterate a lot. But I think I also, there are times when someone builds something and they don't do lean startup, say, and they get through and the thing is like fully built and it's not finding product market fit. There are adjustments you can make. There's ways to find markets for something that's already been built. So it's not like a give up moment necessarily, but I encourage, again, I'm just going to say this over and over again, like very early on, like, is this market big enough? Am I going to create real value in the world if I do this, both for my investors and for the users of the thing? And if the answer to that is like no-ish, like it's not big enough, I would try something else. Like, life is short, do something else.
So Jean Ann, since you've had 3 companies successful, and the title of our panel is about successful entrepreneurs. So what advice would you give an entrepreneur in that first year? They've been funded. They finally got what, the dog caught the car aspect of this. So looking back, not now that you're really successful, but even maybe looking back at that very first, what is that first year like now that you've got someone else in the car with you and you have their money?
So I have a slightly different take on that than perhaps many other entrepreneurs, and Howard can certainly attest to this. Like Joy says, life is way too short. And my perspective on that is that when it comes to our investments, I run the company super transparently with my investors. So since 2014, every single month, I've done an investor report to our investors. And I've funded Unalyware $15 million, mostly 25K at a time. So that's a handful of folks. It's a one-pager on the business and then full financials every single month. And that kind of discipline pays off very much with your investors and with their ability to help you. So one of the advantages that Unalyware has had is because I do have a large pool of angel investors, there is somebody who knows somebody in everything I need. And so as long as they know what it is that we need, then they can help. And so it pays itself back. But in that first year, one of those big things that you have to do is to, create the structure that's going to be, this is the way I'm going to run this company going forward. And this is the way that we're going to be successful. In my world, that means, this is the transparency with which I'm going to drive the company. I do have one other little, snippet that I give people sometimes about that perspective. And that is, once you're an entrepreneur and you're, in the chaos of building your business, and it's always chaos, there's a tendency sometimes for people to compare the chaos that they live in with whatever just happened in a competitor or adjacent area startup. And so it's kind of the summary is, never compare your reality to another startup's PR, because that'll derail you. Only compare your PR to their PR and then figure out what it is you need to do to get going.
Yes, we spoke about that. And I thought that was a really good point on the whole emotional aspect that the entrepreneur goes in. It's a very isolating experience, but also there is this external pressure that comes in from many different ways. And one of them is you're always looking that your competitor is somehow doing it so much better than you are. And so your point about PR to PR is they're looking back and making maybe the same assumption about your company. So it is, that's why I wanted the people who are listening today to understand the whole, the stamina, the mental stamina that is required for you to move past those types of hurdles. So before we go on to the women part of this, because I want to segue, but I'd like Howard and maybe Joy. So this whole aspect of financial projections, and you and Kim and everyone has lived through it. And because Kim, you were like a little bit of the West Coast model. You said you did things on your napkin and everything, but here, it's projections. Where should an entrepreneur, how should an entrepreneur think about projections when they're doing their business plan? Because as we talked about earlier, that first year after you get your money, there's this big transformation now occurring. What are projections? I mean, they just laid out all of the things they're going to accomplish in black and white numbers, but it doesn't happen. Howard?
Well, I think it's safe to say that the projections that we see are nothing more than mid to best case scenarios that might happen in the marketplace. If Keiretsu's famous for one thing, it's the fact that we have the most rigorous process of vetting deals as the part of our due diligence. And when we go into due diligence, it's not unusual for finance, legal, IP, marketing experts who are members in Keiretsu jumping in to do that work. And we obviously do a credible review of the marketplace and the opportunity. So if the numbers are blue sky, the old expression in the venture space is, if I see a hockey stick progression of revenue, I need to run away now because we know it's not likely going to happen. There are obviously exceptions to that, but they're few and far between. So we don't necessarily ask an entrepreneur to prick his finger with a pin and sign those projections in blood, but we do expect them overall to make the 1,000% commitment to getting the ball over the goal line to win the Super Bowl and get us all the return. And really, most of that is not projection finance oriented. That's product success oriented.
So Joy, what would you add about the whole aspect of the financials and an entrepreneur who is, they do not have a financial background and they do not yet have a CFO, but they are moving in a really positive way? What should they be thinking about this whole aspect of numbers that you could add to what Howard shared?
So I agree with Howard. I don't think they're going to come true when I see them. Usually what I'm looking at is the logic of their minds. For me, it's like an exercise in how this person thinks, and are they logically thinking about the market? Have they taken the right look at it? So I'm teaching this in my class tomorrow. I have a 3-hour session tomorrow on P&L, like just financial modeling. And these are undergrads, so they have no idea. And they're going to be doing it for like these crazy ideas to help, save the world ideas. And, really just the basics of, how big is the market? How much you think you're going to capture? Is that even remotely realistic? So can you do like this sort of top-down analysis of how big you're going to get? And then are you smart enough to then take a bottoms-up look at it and say, okay, wait, that means I sign on 100 customers a day in the first year. That's not going to happen. So what's actually going to happen? And then after that, they're probably going to be wrong. And for like so many reasons we can't mention in this call. So, and that's okay, as long as they've had the rigor. I'm really like looking at how their brains work. That's what at this stage, I think you're talking about, just pretty early, looking at how their brains work.
So Dave, we're going to segue over to more about the sort of the women entrepreneurial experience in funding. But I also have gotten a few notes that people want you to speak up a little bit more.
I will try to speak louder, and I hope that's better.
Okay. You're all being graded on this now. So
I'm just trying to show I'm coachable. So one of my favorite management quotes is from Eisenhower, and it's planning is everything. The plan is nothing. And to what Joy was saying, it's really about when you make a budget. My favorite snarky comment from an investor was he looks at 5-year projections as poetry. So it's like, don't take the numbers seriously, but take the thinking and the assumptions and why you put those numbers in as absolutely gold, because that is what's showing what you bring to the party. So I'll just talk really quickly about some numbers in the state of the industry and looking at it sort of from two perspectives. One is venture firms and how they're constituted. In the U.S., about 13% of managing directors in investment decision-making roles are women. It's worse in the rest of the world. About 60 to 70% of venture-backed startups have no women on their boards. And in private companies, about half of private company boards, which are usually bigger, have all men. So the decision makers at the top are mostly men, and that's changing very slowly. There's a long funnel. There's lots of work about why things might not be as welcoming as they could be, but that's the current state of play. From a founder perspective, about 3% of venture dollars go to female founding teams. Over 80% of founding teams are all male, and more teams are mixed men and women than all women. So it's a very small minority. That 3%, less than 3% number has been fundamentally flat the last 7 years. Part of that is the super rounds, the $100 million rounds go to companies that are quite mature. So if you look on a new deal basis, it looks a little better, but it's still extremely heavily over-indexed for men. Two other points to think about in the sort of structural nature of the playing field. There are, I think it was an HBR or Harvard study, but companies pitched by men and women. So same company, pitched by men, pitched by women. The pitch by the man does better with both male and female investors. But having women in the investment committee doubles the chance of a female founder getting funding. And there's also a bunch of peer-reviewed stuff that female founders get questioned differently by investors than men. And the questions tend to be more about downside and less about upside. I've got lots of footnotes on all this stuff. If anybody's interested, I'm happy to talk these details endlessly, but directionally recognize that there are some structural obstacles, recognize that the composition that you're dealing with is heavily indexed male, and then you want strategies to address that.
So let me jump in here. So Jean Ann, and then I'm going to go to Kim. So what's your experience and what's your observation on this?
Yeah, so it was really interesting for me because prior to Unaliware, my companies were 100% venture backed. I mean, I spent all my time on Sand Hill Road. Unaliware is majority angel backed. We do have a couple of micro VCs, but that study that Dave was just talking about was published in 2017, and it was a bunch of business school students that followed venture capital and angel investors at TechCrunch Disrupt, and they videoed all of the interactions. And the study was a game changer for me as I was learning how to pitch angels, because I had been approaching, women first funds as women, right? So, everybody loves somebody who's just like them. So I'm like, hey, I'm a woman, you're a woman, we can do this together. And that wasn't working. It wasn't working at all. And I didn't understand why. And the thing that really struck me and completely changed the trajectory of how I was pitching was that what the study found is it doesn't matter the gender of the investor. It only matters the gender of the entrepreneur. So I had been pitching all those women as women, and I needed to be pitching them all as investors or men or investors, right? And so when I made that change, angel investing for Unaliware from women changed completely. And that's really important in, again, the experience with Unaliware, because what I also found is that the investors who successfully brought somebody else along who invested in Unaliware were, with only one exception, they were all women. The majority of the time, well, every time except for one exception, when a man introduced somebody else and said, I think that this is really interesting, you should join, I didn't close that deal. But when the women did it, I closed them every time.
That's a really interesting dynamic. So Kim, you're out there. I just want to throw out that in the conversation that I had with Kim, that you were in the business development side. So anyone who's got a sales personality or sales skills, I see that as a really strong asset to going out there and raising money. But explain a little bit, in your experience, did you see any gender issue emerge or something that you adjusted after you were going out there and meeting all these different investors?
So for me, I've never, or not that it hasn't been in my face discrimination wise. It's been a great experience, and I get told no, I get told yes, people invest. But if anything, when you look at, product market fit for investors, so just be sure you're pitching where you're in line with their thesis. And there are a lot of groups out there now that are looking for women founded businesses. So of course I apply to those. A lot of our management teams, women led. But for us, we've got a complete mix. Our board is mostly male. We've got one female in there, or two, including myself. But I haven't had a bad experience with it. So I just go look for the right fund, and that's a good fit for what we're building and doing, and male, female pitch, and we fit some and we don't fit all. And so my experience has been pretty, middle of the road, but lots more opportunity now from when we initially started because of specific funds focused on female-led businesses. So there's more opportunity from when we initially hit the ground in 2017. So take advantage of those opportunities for sure.
So Joy, please add to this perspective about what's going on in the landscape out there for women. And, Jeannie brought the whole aspect that, a woman pitching to another woman is actually not, there's no added element to them. They're still just judging you as any other potential, candidate. What are you seeing in the landscape or things that are changing?
Well, I'm very, David's statistics that he quoted form the first 5 pages of the deck for the fund that I'm raising. So very familiar with the numbers. And, my partner and I, as first-time fund managers, have had a lot of hurdles. We are going to close. So we've overcome them, but it's not been easy. Our thesis is that women are so ignored by the current venture capital system that they're actually a good investment, because the valuations are lower and they just can't get capital. And women are basically, Dave, the numbers we have show 2% that there's a fall off again in COVID. So at 2%, female-only led teams are basically shut out of venture capital completely. I mean, 2% is just nothing. So, they really don't have access to the traditional venture capital markets at the very early stages. And so, what my partner and I are trying to do is right that wrong by adding more women in the mix as decision makers, and also women only focused funds. And so I am a believer that we need to correct this. It's like a market correction that needs to happen. And that it has to be purposeful. It's not just going to happen. People, me and, hundreds maybe of others like me and my partner need to do this in order to correct the market. I'm hoping we put ourselves out of business in 10 years. I'm hoping that 10 years from now, the playing field, and I don't think it's going to take that long, the playing field will be even enough that this just won't be necessary. And hopefully we'll have had tremendously successful fund and we'll raise on another thesis going forward. But for right now, it's very, very needed.
So I am seeing these VC funds being set up by women, but there's not a lot of them. And
there's not a lot of them, and there's not a lot of capital in them.
Right.
So that's really, there's a lot of micro funds. So my partner and I are trying to raise a bigger fund. Yeah, go ahead.
So you're one of the agents of change, Joy, and I see Jean Ann shaking her head vigorously.
Trying to be, yeah.
Entrepreneurs are problem solvers. So I don't know if I want to put you on the spot, but what should women be doing? Are there women's foundations? All of this affluence we have in the country, where does it get unleashed towards deserving women?
Well, I can tell you what we're trying to do, and I know there are others like us. There's Broadway Angels but they're very early investors on the West Coast, for example. Really credible women coming together. So I put together a group of 35 former C-suite women, former and current. Actually, the ages are like 25 to 75, and we made our first investments with using their capital, and now they're all investing in our fund. And what we provided was real. What we're providing is mentorship, and it's very it's quantitative mentorship. So we go in and we'll help rework the business model. We're really spending time in a way that I think, most VCs really don't have the time to, but it's part of the model that we're building. So we built this big advisory group for the firm, and they're just going to go in, and all these people have been CMOs and CEOs and some of the biggest companies in the world. And they'll go in and, help these women with the original plan. And what we're doing is really helping them develop the businesses. So I think, there's a bunch of companies like this. There's Springboard Capital comes to mind. They don't have a fund, but they do provide mentorship. And there are a couple of other smaller organizations that are providing this kind of thing. Look, I feel like there's a vacuum, so I'm doing it. Like it's, I thought there was too much of a vacuum, and we're starting an ecosystem where I'm creating a boot camp, for example, for female founders that's going to be at Princeton during their January term that will take on the road to other universities and other cities.
So Howard, I want to get to you about, Kiertso, but before I do, so Jean Ann, your head was bobbing up and down. So I have to ask some of your thoughts, because what I'm asking is, Joy is a change agent. What are the other elements for accelerating this really serious pain point in venture capital?
Well, so there's two things. So one, I was a bobblehead in a car as Joy was talking about a larger fund, because one of the biggest challenges for me as somebody where the product is first physical, you got to have some grown-up capital. And so the majority of women first funds are micro VCs. And, if you've ever looked at the article on VC math, it's super important that you actually understand the VC math. I need funds in the $200 to $500 million range. And, about every decade, the money sources kind of move up. And when that last happened, we're actually in a transition right now, but when it last happened was when I started Unaliware back in 2013. It had just happened after my exit in 2009. And I, all of a sudden, we didn't have any funds in that $200 to $500 million range. So, it's super, super important that we actually get some women first funds that are large enough that they can carry us the rest of the way there. And that is critically important. And I lost the first part of your question because I wanted to tell you why I was a bobblehead.
So Howard, women and care to forum. So what's your experience? What do you think how some of the changes that have started in the last 5 years or so that is changing this problem?
Well, I'm at a slight advantage here because two of our portfolio companies are here on the call right below me in the picture. And I've known Jean Ann now for a long time. She came to us by way of a personal referral from a company that ended up raising over $50 million from angel investors, of which almost half of that came from Coretu people. My personal inflection point in this investment world is that I believe that women CEOs and founders make better investment objects than men. And we go out of our way to look for them all the time. And I'm hopeful that the two on the call today would have nothing but great things to say about the process that they went through in Coretu and that they weren't held to any other standard. We go out of our way looking for them. I think it's unfortunate we just can't find enough of them. We're about to, and we just started advertising for our annual Investor Capital Expo program that'll take place in November over 2 weeks, 24 companies. And in our planning meeting yesterday, we discovered that of 24 companies, we have like 3 female founders out of 24. Now it's 4 because Jean Ann just joined in. That's just totally unacceptable. Where are they?
So actually, I guess that is the question. Where are they? Are the universities sources of grooming or identifying women entrepreneurs, or is this? Okay, Joy?
I'm at a university. I don't mean to interrupt, and I can tell you that when I started teaching 7 years ago at Princeton, my class was all male. It was smaller and it was all male. And now it's doubled in size and it's half female. And I think if it's like horrible old school expression, but if you can see it, you can be it. I really do believe that. And I think that, women certainly young women at Princeton are reacting really well to the fact that, a professor who teaches the most seminal class on entrepreneurship at the school is a woman, and, they take my class. And that wasn't happening before I started. So I think that that's been, and then Princeton's done a great job in recruiting other women to the program. And I don't know what our numbers are exactly, but I think the engineering school, which we teach out of, that's our home base, is I think it's getting close to 50% women from a much lower number, several years ago. And that's not just obviously, that's like many changes the university is making.
Gina,
I want to add one thing to it. I mean, I certainly see, like Kim, I'm also here in Austin, Texas, and I certainly see a number of female entrepreneurs, but a lot of the fall off is pretty high. And I think one of the biggest things, and what I spend a lot of time mentoring people about is actually dealing with the successful way to turn those prevention questions into promotion answers. And so I was really lucky that before I went into entrepreneurship, I had, a lot of years in semiconductor companies and corporate roles. And so I had the benefit of corporate PR training, which is, the classic training of, you're talking to a reporter and they go, Jean Ann, your company's results were down last quarter. How are you guys going to stay in business? And, corporate PR teaches you to go, we were investing so heavily because our future is going to be enormous, right? Some kind of thing like that. And frankly, that's the same skill that the entrepreneurs have to learn, especially the female entrepreneurs, because you're going to get that prevention question and you need to be able to turn it into the promotion answer. So that not only do they understand that you've got the basis of the business that made them go, I'm not sure you can do it, but also you can paint that picture of the future that's going to give them the return that makes them understand why you're doing what you're doing.
Well, it's a really early exposure to realizing that maybe as women, we need to change our mindset, and direct feedback of failure is probably one of the ways that we need to embrace failure and say we're just going to keep going forward, which is what we discussed. Now, we have about 7 or 8 minutes left. I am seeing some remarks coming in from some people in the audience. So I'm not seeing on the QA part of it. This is where my technical expertise is for. So I'm looking at the chat and seeing if there are any questions being submitted. If they do pop up, I will jump in. So we're pretty much wrapping up. So I'm going to let each one of you give just sort of the heartfelt advice to whether you're in the early stage or you're in the late stage. What advice would you give to entrepreneurs in general? We've covered women. We see there's got a lot of work to be done, but it still comes down to, because I want people to leave with a takeaway. And I don't think there can be any better takeaway than people who are successful, if they can go back and remember when they weren't successful and be willing to share what changed the story for them. So Kim, when we spoke, your business development personality was so clear to me, since I'm such an operations personality that most people don't realize. They all see me now as more of a sales personality. I almost lost my first job because I didn't talk. My college friends don't recognize me, So for Kim, when Kim and I were talking, I was like, my God, if I could have been born as Kim, maybe my story would be different. So what advice from your perspective, Kim, you would just give entrepreneurs who are really living the life of an entrepreneur?
Sure. So I think one, building businesses is hard, regardless of what stage you're at. Early stage, we're further along. We're not that scale stage, but it's hard, and you just have to keep going. Assuming you've got product market fit and a large market size that the model's working, but you just have to solve the next, and keep going. And there's a lot to solve. I love the podcast Masters of Scale, and one of it is just let it burn. There are little fires everywhere. Just let it burn. Pick the one you're going to put out, and then you look back the next year, I remind my team all the time, remember where we were this time last year and the prior year. And for us, before COVID, we had just signed a big deal with Airbnb. We were launching markets, and then our industry, everything came to a screeching halt, and we just got the team together and solved, and we survived, and here we are today growing back out of it. But building business is hard. You just don't give up. You keep going. And they're fun. Got a lot of scars, but they're worth every story.
Okay, so here's our first question. This is David's. I created a software product that has been accepted and used mostly by women, which was not my intent. I lost my other partner and need to find a woman partner to help promote this. Where can I network to find the connections I need? Various technology networking groups are not working too well for me in my state. I won't name their state, okay? Because I don't want any phone calls. So they're networking around in, I guess, the meetups, et cetera, but they're not finding this potential woman partner. Any thoughts on where they should be looking or how to look?
Posting.
Post
Yeah.
where?
LinkedIn, Indeed, and just put your parameters of what you're looking for and expand your network out of just the in-person or the Zoom. But I post as if it were a job search.
Okay.
And also not necessarily the technology groups. Try the entrepreneurial groups.
Yeah.
one of the things that I do is I try to create a pathway. So I reach out to people that I know, and then in the course of a conversation, I pose to them a need, and then I let that filter out through their networks. And so you're not getting a direct connect, but you're working your indirects who then come back at some point and they help you out. Let's see. So Kim's given us advice. Joy, we've got about 2 or 3 more minutes, everyone. I want to give one entrepreneurial advice as we wrap up.
I don't think we've spoken enough about failure here. And I do think that part of certainly what I teach at Princeton and how I think about how working with entrepreneurs is being okay with failure and knowing when to move on. And that's not necessarily from your whole company. It might be from a single product path or a single, decision you've made. Like, it's a cliche also, but this fail fast thing, it's real. Just and it goes with your little fire, big fire thing. Like, go after what's working, ignore everything else, let it fail. Go after it.
And I love that perspective, because when I first started my first startup a long time ago, and it was failing, back then you could not go back to corporate. You were a failure. And that mindset has changed so much. So when I could not go back to corporate, I had to succeed. So Jean Ann, your advice?
I think one of the things that is very challenging as an entrepreneur is, taking that information from all of your mentors, all of the people that you've spoken to about your business, and still having to decide, do I do this or do I not do this? And so, if I went by when I should fail or should have failed, I can't even count how many times Unaliware would have failed. And yet we are kicking major booty in the market right now, and we save lives every single day with a Kanega watch. And so it's kind of a little bit of mentor backlash. Somebody says it's just too hard to raise money for a physical product company in the United States today, especially for Silvertech. What do you think you're doing? And the answer is there are 54 million of us above the age 65, and I don't want to wear a pendant. And so I knew I was right. The question is, when you get to the right market point, and how do you decide when you're going to fail and when you're not going to fail? And there were years where Unaliware continuously had less than 6 weeks of runway. Howard can attest to this. But yet we found a way to keep going, because I am probably the most stubborn person in the universe. And I also knew that I was right. So you have to decide that you've got the grit to be able to take all the information, and maybe you are wrong, or maybe you come out of that information and go, actually, I am right. And this is an opportunity, and I can deliver those results.
So I particularly appreciate your sharing about 6 weeks of runway. So Howard, I'd like to ask you for your advice to entrepreneurs. And then Dave, I'm going to let you think about how you're going to talk about stress in your life. So Howard, what's your advice to entrepreneurs in general in taking this path that may consume their life for years?
That's a tough one.
I thought I gave Dave the easier.
I think that I've said to people, young entrepreneurs, older entrepreneurs, many times, that when you make the kind of commitment you make to build something innovative and new, a business, whatever, I said you have to kind of look at the level of commitment that you're willing to make. At the end of the day, for young entrepreneurs, investing 1,000% of their effort and commitment is doable for a reasonably short period of time. as we mature and get more successful, I think it's very important that people recognize that while investors may be still expecting 100+% effort, at the end of the day, there are other things in your life that are as or more important, i.e. family, health, etc. But the very, very first thing after those major commitments should obviously always be the commitment you're making to those investors. But from a stress standpoint, if you're not capable of managing the ups and downs of everyday life and trying to build a successful business, then you're not an entrepreneur. You're a wannabe. The entrepreneur recognizes very early on that there are going to be days where they feel like they're the king of the world, but many of the days they're going to feel like they're the janitor and people are just dropping stuff in front of them on purpose to make it even more messy. And you have to be just willing to take each and every one of those days as if it's just the way life goes. I tell people all the time that in my investment, as well as in my golf game, I'd rather be lucky than good any day, but being good makes luck in and of itself to some extent.
So Dave, you get the final, I don't know why you're so lucky for this, for the final word.
Sure.
So, but I do want you to address, because we talked a little bit about rejection and failure. And for me, because I've been an entrepreneur since the age of 24, and Howard just touched on it, really the work-life balance is, share a little bit about the stress and anything else you'd like to add as advice. This is our last wrap up.
Sure. So one thing I just want to say, because we didn't touch on it too heavily, although I think Jeannie Ann's conversation about reporting financials and being transparent every month, it's super important as a founder at the beginning to understand that the actions you take set the culture of the company. And it is really easy to set a culture. It is really hard to change a culture. Think of it as like trying to take ink out of the swimming pool. It is hard. So whether that's financial transparency or whatever is important to you, whether you let assholes that bring in high revenues stay or go, stuff like that will define the trajectory of your company. With that, on stress, I would say it is your job, it is the founder's job, and it is any good leader's job to absorb uncertainty. And you need to make every startup starts with broken pieces, stuff that just doesn't work yet. And you are going to have a team that's trying to work through the incomplete company that you have and that you're building towards, the dream you're building towards. And you need to make it a place where that stress doesn't disrupt your team beneath you. And figuring out how to do that well will make you a great startup CEO. And if you can't do that, you will crucify your team. So that's my closing thought.
So I'd just like to thank Howard heretofore Mid-Atlantic, who has partnered with American Entrepreneurship Today to bring this panel. And I've spoken to all of the panelists before the meeting, and it was an absolute joy for me to speak with them one-on-one. And I just hope that I was able to translate what I gained from them to the audience and whoever listens to this recording, because entrepreneurship has been, a phenomenal passion in my life. So thank you to the panelists for doing this, for the prep time, and if anything comes out of this, I'll direct some people to you and any follow-up you can do. So do we give a hands up or a thumbs up for this? And thank you for participating, and thank the audience really who signed on, and for the many. Jean, I need to see the recording messages I got this morning as well. So take care, and again, I'm going to end the panel.
Thank you.
Thank you.
Thanks all.
Okay, take care.